Good morning, everyone. Hope you are all going well. Hope you are prepared for the week ahead. Um, this is the weekly breakdown on all pairs we are trading. So currently, I have GBP USD, XA USD, USD JPY for you people trading USD JPY, GBP JPY for people trading GBP JPY, and I think that's it. So starting our analysis with GBP USD. On daily time frame. You can see clearly on GBP USD that we have a daily impulse leg, which is our A setup. You can see clearly we have a daily impulse leg. The daily has been bullish all the way from here. Market turns bullish at this point. Now we have this pullback, which we took short in the buy, and we moved up. Now we're expecting this second buy, the second wave of the buy to come into this level, but market fails to get there. So market did just a shallow retracement and give us an impulse leg to the upside. So what are we waiting for? We are waiting for a retracement into this area, this daily order block area, in order for us to impute a new buy, to create a new leg. So that is why we have ourselves a daily impulse leg here. The daily impulse leg here. And within the daily impulse leg, we have H4 trading range, which we have the low of the range and we have the high of the range. How do we confirm the high of the range? One low needs to be taken, and this low has been taken out. Now in close range from this point here to this point here. Now, how many internal liquidity do we have within the range? We only have this internal liquidity. Now, what is the PU that we are using? We are using this weekly rejection. Weekly. We are using this weekly rejection of our PY within the range. You guys can see clearly. And the same thing as a daily order block. So we refine the weekly rejection into H4 rejection that is closer to the weekly rejection. So what are we expecting? We are expecting GU to went all the way down. Tap us in, give a break of structure, counter-trend on bullish based on H4, another opportunity to scale in for more buys till we get to the external of the range. Now this is a setup and it takes time for it to actually play out, because we are about to target 300 pips worth of price action. So personally, in my own opinion, I'm using 30 pips. So 1 to 10 is more than okay, because it is based on a setup. Most it hardly fails. So this is what I have on GU. So all we need to do is patiently waiting. Now, how can we join the seller all the way down to the downside? Then you have to make sure your range. You need the two questions you need to ask yourself: have we tapped into 50% of the range? Do we still have internal liquidity to be taken? This is the 50% of the range. So still we haven't tapped into the 50% of the range. We are still within the premium of the range. You haven't get into the discount of the range. So you can actually take a counter trade, and you guys know counter trade is less probable. So I will kindly advise you guys to risk less on those kind of setup. I actually advise you guys to risk less on those kind of setup. So we want to take this counter trade, you can take this counter trade from this H4 rejection. Expect price to push up into this level. And if you feel this week is too much, you guys can just wait for M15 confirmation or M5 confirmation. When market get to this point, wait for a break, then you enter from the confirmation, then you target this low, you target this liquidity. Do not target this point because price might not get into this point. So it's better, it's safer for you to target. This is the safest TP for you, or you target this liquidity points. Then you let them retrace all the way down here. You can buy up. So that is that on GBP USD. Now let's move on to gold. On gold, this is what I have on gold based on SMC, because I know a lot of you guys don't understand the XNR yet. So but let's just approach it with SMC so you guys can have the clear understanding about it. Now, on daily, you can see clearly, according to our approach, we have a daily impulse leg. You guys can see it clearly. We have a daily impulse leg to the downside, a book structure. And within this daily impulse leg, we have ourselves H4 trading range. We have ourselves H4 trading, which we have our maybe use this point as your stop loss, major break of structure. Now, this point here, we enclose the range. We have the high of the range, but we do not have the low of the range yet. So now, we have the high of the range, which is this point. We are waiting for the low of the range. So how do we confirm the low of range? This high needs to be taken as for we to confirm the low of range. And what is this period? Weekly rejection. Weekly rejection block is the POI within the range. Weekly rejection block is the POI within the range. So I actually refined it a little bit into H1 rejection, I think. What did I have this POI here? So okay, then let's leave it that way. So same thing, same approach. Now moving on to USD JPY. Yeah, on USD JPY, we are finding buys. Why are we finding buys? Because we have ourselves, if you look at the structure together, we will have seen USD JPY is bullish. It is bullish. They have been maintaining the bullish order flow from here. Higher low, higher high, higher low, higher high, higher low, higher high, higher low, high high. Then a tiny little pullback, higher high. Then it came back. Then they give another higher high, another higher high, and they give a pullback here. Now we can focus on this last impulse leg on USD JPY. So this is the last impulse leg on USD JPY. Daily impulse leg that broke structure to the upside. So now within the daily impulse leg, we move on to H4. We have ourselves H4 trading range. We have ourselves H4 trading range. We have the low of the range, but we are yet to have the high of the range because this is where it is. So immediately this low has been taken, and then we can classify this point as our high of the range. And within there, this period that I pick out here is the weekly rejection block. Pick up this weekly rejection block. You can see it, weekly rejection block. That's what I picked out. Now I refined it into, this is where the weekly rejection block lies at. So I refined it into the last point of liquidity within the range. You guys can see clearly. If they should actually take out this low, you would have seen clearly that you really have two internal liquidity within the range. This point is serving as range enclosure, and this point as the internal liquidity. So I refined the weekly rejection into the last liquidity point of the range. So in the sense that this is what I'm expecting on USD JPY. This is somewhat like an intraday, but Imagine all this USJPY, GPJPY, and the other pair that I want to add to my pair. I don't want to trade intraday on them. I only want to trade intraday on GU alone, like my B setup and C setup alone on GU. But other pairs, I'm only taking A setup on them. You guys know what I mean by A setup: daily impulse, H4 trading range. That's what I mean by my A setup. So now, that doesn't stop the fact that this place might hold and give a push to the upside. But if it fails, then it will enclose the range. And we can expect something like this. So all the way coming down to take the last internal liquidity of the range. Instead of refining my PY all the way down to this rejection block here, they might just take out this internal liquidity and go. And they might just take this internal liquidity and tap into this H4 rejection. That is the reason why my stop loss actually cover this point. Even though they want to tap into that level, then we go for the external range liquidity. Go for the external liquidity. Now, GBP JPY, same scenario. Why did I have my PY here? So I have stop on my break of structure. So why did I have my PY here? Now go back to why did I have my setup like this? You go to daily. You can see clearly on GBP JPY as well. GBP JPY as well has been maintaining a bullish order flow. Has been maintaining a bullish order flow. Pull back. We moved up. We moved up. Tiny pullback. We moved up. Pullback. We moved up. Pullback. We moved up. Pullback. We moved up. And pullback. Then this is our last. This is our last impulse leg on GBP JPY. And on GBP JPY, this is our last impulse leg. Immediately having our last impulse leg. Now within this impulse leg, we have ourselves H4 trading range. We have ourselves H4 trading range, which we have here. We have our stop point around this level in our block of structure here. Then we have our internal liquidity. Within the range, we have the low of the range already. Now we are finding the high. So immediately they take out this high, then we can focus on this. Our POI is what? A daily rejection. So we're expecting market to do something like this on daily. Higher low, then higher high. So on GBP JPY, that's where we have there. So thank you. And let me recap GU for you. GU is our main pair. We are waiting for GU to get into this level in order for us to buy to the upside. Now we can take this counter trend. Now, if you are feeling that, oh, this counter trend is the wick is too much, like the wick is too long, you can actually just wait for M5 confirmation entry whenever they tap into this green zone. Because I wouldn't want to use 65 pips. No. I wouldn't want to use that. So I would rather wait for confirmation entry on market time, even though it is a C setup. So confirmation entry will give me more hedge over it. Maybe M15 and M5 confirmation entry, something like this. Stop point, then break, then you can actually just enter from the retracement and do that. So we're waiting for the buy. So that's all we have on our wish list. So thank you guys for watching.